digging just a little bit deeper into stablecoins, and it just was like a really good way to send capital from A to B, talking about pre-pandemic, pandemic. I think that that's where I found my first real use case about using cryptocurrencies. The biggest question always was, what do I do with this? How do I move it? How do I sell it? What's the palpability behind it? On-chain FX is just basically a way to replicate USD and non-USD fiat movements on-chain or in on-chain markets. Many remittance companies, what they've done throughout time is that they built their own spot order book. They basically say, this guy has dollars in Costa Rica, but he needs to send dollars to the US. We see markets in two different ways. Markets that work and markets that don't work. Latin America has just been overlooked.
Hello, everybody. Welcome to another episode of Frontera, the podcast where we analyze what's happening in Latin America. We bring the best founders, the best VCs, the best builders. And today we have Juandi, the co-founder of Capa. It's really funny how Juandi and I met Ethereum Mexico 2022, I think. And we were just sitting right next to each other and just started talking. And now we're here, 3 years in, my friend. How are you, man?
I'm doing great. Actually, we started talking a little bit more, and then we later found out that we also did the same undergrad, but 4 years apart. So I guess it was meant to be. Or
Yeah, exactly. And Kush, my bro, how's everything?
GM, I'm doing super well, doing very well. I remember when my first time meeting Juandi, I was like, who is this crazy guy? Like, this guy has so much energy, super cute into like kind of crypto scene as well. So really happy to be bringing Juandi onto the podcast and excited to jam with you, Juandi, on everything you've been cooking up a little bit. But yeah, man, I guess just to kick things off, Juandi, tell us a little bit about yourself. Who are you? Why are you in this industry? You know, and what are you up to in the space?
My name is Juan Diego. Just call me Juandi for short. Born and raised Dominican. Moved to Mexico around 8 years ago, so I did my undergrad here to pay for college. I think that was my initial permeation to crypto. There's a big duffel bag back in my room there that I used to go with it full of pesos and cash just to buy a ton of stable coins and just flip it on the open market. I've always been a big fan of what's been happening with how money moves. So it's probably been my passion ever since. And pretty much into art too. Not the kind of NFTs, but the IRL one. So yeah, people also say that I talk too much about LATAM. So
that is not a problem on this podcast. You've come to the right podcast to talk too much about LATAM, man.
Yeah.
And dude, how come you ended up in Mexico? You're Dominican and then you migrated. Why did this happen and how does crypto play a role there?
I guess I was never a great student. So I just couldn't get a scholarship in the US. Later I found out that I couldn't get it in Mexico either. So one thing led to another, and uni went there with a partnership to my old high school, and I eventually said yes because I just didn't want to be back in the Dominican Republic doing my undergrad. I think that the most important piece about crypto and how initial permeation started, it was that I understood money movement since a long time ago. My parents were the ones that at the start, they're starting doing like the big lines in Western Union to send money for me to pay rent. But they later found out that you can be a little bit lazy and just pay the 20% spread on your credit cards to pay for rent, which was not exactly the most efficient thing. Later on, we started digging just a little bit deeper into stablecoins, and it just was like a really good way to send capital from A to B. We're talking about pre-pandemic, pandemic. And I just think that that's where I found my first real use case about using cryptocurrencies. I was never a lot into staking or most of the new technology that was at that time, like dank sharding, proto-dank sharding, which I thought that it was a little irrelevant. But stablecoins always had a use case for things that were directly involved with family or with livelihood.
Juandi, that's a super interesting story. And it's something that we often, I think with every Frontera episode that we do, with every guest that we bring on, we really try to do deep dives into these different subjects. And today we'll be talking a lot about FX markets, money movements, and stablecoins as well. So for all the listeners out there, make sure you subscribe to our newsletter, Frontera EC on Twitter, and then you'll find all the relevant links there to our Beehive and so forth as well. But Juandi, I think one of the really exciting things about crypto in the region that you mentioned, proto-dank sharding, for example, right? And to your average end user, oftentimes that can feel like a very alien subject. But when you tell them, hey, did you know you could send money from the Dominican to Mexico in a matter of seconds with pretty much zero cost, then it clicks with people, right? And so I think I'd love to dive into the problem sets that you were experiencing and sort of the inception story and the seed for how Capa came to be in the world, right? Because I think that's, as founders, oftentimes the best use case that you can find. You're like, hey, I have this personal problem. Do 100 other people around me have this problem? 1,000, 10,000, 100,000 other people around me have this problem, and boom, you found yourself a business, right? So let's talk about that inception story for you and kind of the origin story for Capa as well.
I think it has to start just a little bit before Kappa. I do remember that I graduated from college and I got an offer to launch WorldCoin with their core team back in Mexico. And one of the things that I learned the most, which it was like a lot of boots on the ground action that you had to scan eyeballs of people. The biggest question always was, what do I do with this? How do I move it? How do I sell it? What's the palpability behind it? I don't know if that's a word in English, but I do think that initially kickstarted curiosity that maybe I had a problem and there was other people with the same problem I had, but probably with a smaller ticket size, not even for rent, but maybe just to find the proper value for it. Eventually, before starting Kappa, I was building a competitor of Dollar app that was called Alcancía. So it's like the word piggy bank in Spanish. And it was a way to convert pesos into USDC the fastest way possible, a frictionless way to earn yield on top of US Treasury bonds. And then we learned that basically consumer was not our forte, but there was still an issue with payments. Kappa came to be as a consumer platform, and eventually we started getting initial traction, but we later found out that our forte was high tickets in businesses. Basically, what's the fastest way you can get access to money desk, or where high net worth individuals have access to get dollars at a cheaper rate, or to not have any ticket limitations when buying US dollars. We've probably learned about this before, or we've seen it on thousands of threads. Consumers can buy more than $500 to $1,000 per day in any of the LATAM countries. Now, Money Desk let you buy high amounts, not unlimited like a Circle Mint account, but they do let you buy a ton. Finding this in a business use case, we just later found out that there's two verticals that just didn't work. High ticket for businesses to do cross-border settlements. And then there's a really weird and emerging market that it's a new movement that's called on-chain FX. And on-chain FX is just basically a way to replicate USD and non-USD fiat movements on-chain or in on-chain markets to end up having some settlement into a local currency with a local non-blockchain payment system. I think that's where our curiosity sparked more in the last couple of months, because we've seen a lot of stablecoins that are non-USD or they're non-hamburger related. They're mostly EuroC was the first one to get to kickstart some traction, and then we've seen many derivatives from the Mexican peso. But you have currencies like MXNE that after launching through Kappa, they've gotten some sort of on-chain FX volume that has happened for B2B tickets. And it gives you the North Star metric, or the initial signs of traction, that there's a market for people that want to use pesos instead of dollars to send money from A to B. And it's just easier. It's less friction than what you see back in crypto right now.
Dude, I think that you and I have spoken a lot about basically FX and everything that you're saying. Like on-chain FX is a term that I think it's going to boom in the next couple of years, because whenever people realize that stablecoins are really happening across the world, when you have stablecoins, you need to change that for other FX, for other fiat currencies. And I think that you might be one of the people in Mexico that better understands this market and that better understands the different competitors that are around this specific sub-industry. So could you elaborate a little bit more on on-chain FX? Because people have Mexican pesos in their bank account and maybe they want to do international money transfers or just get stable coins. How come something like Kappa gets to exist and not a big bank or a big fintech can do it?
There's an enormous amount of friction when you're trying to deal with palpable physical dollars on an order book. So many remittance companies, what they've done throughout time is that they build their own spot order book. They basically say, this guy has dollars in Costa Rica, but he needs to send dollars to the US. So who's doing dollars in the US right now and going to Costa Rica so that we can just dot the I's and cross the T's and just do the whole settlement? Those order books work when there's a buyer and a seller. But buyers and sellers in stablecoins are just a little bit different, or in on-chain FX as a whole, as we can cover the whole crypto market on top of it, because it's not a matter of if there's a buyer and a seller. It's a matter of, is there somebody who can offer the liquidity to get this sorted? Now, transactions using dollars was the first mechanism that stablecoins found in use case. And you got many companies that do local currency conversion to US dollars, and they settle back in the US to reconciliate their balance sheet. You probably got Stripe and Bridge. You also have SpaceX. But that doesn't mean that the order book stops there. You have a lot of companies that reconciliate in multiple entities that use other types of currencies. For example, you might have Didi, or you might have an airline company that has a lot of capital stock back in Nigeria, but their balance sheet is done in Mexican pesos. Now, on-chain FX went through a dollar phase where there was local liquidity with local desk, access to dollars, and we had like our own reserve. And then we can just flush it and bring liquidity back again, either through Beats' order book, or you could go through Circle and just mint it again using US dollars. Now we're evolving into a track where we're removing the basis point friction, and we're trying to find what's the neatest way to go from emerging market currency one, let's say the Nigerian naira, to Mexican peso without having to cross through the dollar for an extra settlement piece. And on-chain FX is just passing through a way where conditions from emerging markets are starting to find some sort of relativity, or they're starting to find something common, and they're starting to build their own order books there to hedge different use cases using institutional payouts as a way to build their initial liquidity block to settle and solve those issues between them. And it starts between a connection between Southeast Asia, LATAM, and Africa. But I think that this is going to be done at a global scale. And on-chain FX is just going to be a way to start, as traditional fintechs or licensed entities will start finding a way to have some sort of global adoption using spot order books. But then we will be talking about who has the bare metal connection plus the on-chain order book to run the first money desk that's built based on a real world use case, and not a bunch of arbitrageurs that need to send capital from A to B just to get the extra basis points on top of it.
I love that. And I love that you're very close to that transaction as well. And I think the example you gave of how to go from the Naira to the peso without having to go through this sort of leeching broker along the way, and the power that brings to, I think, and we're talking here on like the order of, some of these transactions are multi-million, if not billion order, right? At some of the bigger transactions that go through, right? And so I think being able to disintermediate and get rid of these sort of extractive players along the way is on a massive scale. And I think totally behind the scenes, the way that we'll be able to sort of move money around and so forth as well, right? But tell us more about like sort of where Capa fits in the story, how you've been able, or how you think about sort of the FX markets. And you're very focused right now, obviously, in Latin America. What does that expansion look like for you? And how do you look to sort of scale that out as you think about cross-border payments and your role in kind of the wider FX markets?
We see markets in two different ways. Markets that work and markets that don't work. The markets that don't work are the ones that have a narrative where still banking the unbanked, it's like a big thing. And there's not a strong B2B use case because the risk of holding that Forex is inefficient. I might sound a little bit controversial, but Argentina for us is not a good market because of the FX risk that it imposes. Colombia is not a good market for us because of the taxes that the new transactional system has and the political instability in financial systems. That makes B2B use cases hard because you can't flush a ticket of $1.5 million in a single day. You're going to pay more than 200 basis points for that with 4 different suppliers, and that destroys the whole chain to get your product settled. Now, markets that are starting to make sense are those ones that have a high dependency of their GDP inside the remittance sector, and they have a high availability on US dollars in quotations from the money desk. And that's where Capa comes in. Capa is just basically a cross-border institutional play on the front end for the remittance corridor. We hyper niche markets. Our 2 best markets are Mexico and Dominican Republic because the numbers speak for themselves. Mexico moves around 12% of their whole remittance volume using cryptocurrencies, but more than 90% of that volume comes from B2B that needs to do B2B first-party settlements. And then the Dominican Republic has a 5-1 relation with Mexico. Mexico moves 5 times more remittance volume, and the Dominican Republic moves the same, but has a higher dependency on the GDP to the remittance volume. Now, Mexico has something really efficient, which is a very liquid FX market. It's very easy to get dollars as an institution or having access to a money desk. But the Dominican Republic lacks something that's called the mid rate, which is basically the mean or the average rate from buying and selling US dollars. Now, when you start building decentralized order books and you start dealing with USDC in a traditional currency that's not on chain like the Dominican peso, Capa is the one that basically builds the whole order book on the front end, but does the market making on the back end to squeeze the extra basis points and to create the own mid rate to standardize a financial system similar to the one as Mexico has it. If we were to go to the other vertical of how we see other companies, you got a lot of stablecoin orchestrators or aggregators that are trying to do global payments, but I think that they see it on the wrong approach because permeating into many markets doesn't mean that your distribution game is key. While if you have a more solid order book, you can promote a faster growing on-chain economy with lesser Forex risk, and you can establish your own rate, which is eventually going to lower the prices, give you a better market, bring accessibility to bigger institutions and actual businesses that move high-ticket orders, even enterprise customers that are multinational companies. And that will eventually let you later on upgrade to a consumer order book, which is, and I hate saying it, it gives you a lot of financial accessibility and freedom for a consumer to even buy $1,000 off the spot order book of somebody that has created its own rate, and it's friendlier than just going to a traditional finance institution where the liquidity has to get flushed or you have to put a ticket to it. If I had to sum it up, Capa's front end is basically company A sending money to country A for company A or company B, while on the back end, we're just building a monstrous order book in 2 to 3 markets that can help us expand nichely and to later know by data, which is the next emerging market that needs on-chain effects, so that institutional payments are not a hassle between company A and company B. Because if we just do the natural expansion playbook, like we'll start in Mexico and then we'll do Brazil and Argentina, there's things in the economy that just don't match. Remittances, it's a very important use case, but the Dominican Republic moves 4 to 5 times more remittance volume than Brazil. So it's going to be hard to match that order book, or it's going to be hard to create it. While similar concepts are easily findable in India or in Hong Kong for more specific use cases with a more stable currency, and that will be brought on chain just to move a proper order book for institutionals to start moving volume on it and just create something more solid than traditional financial institutions have, because settlement is faster.
Dude, you recently launched, you were part of this set of companies that launched MXNE. We just had Dave of Etherfuse in Frontera, and we chat a lot about on-chain bonds and how can anyone leverage the technology to launch a local fiat stablecoin of the Mexican peso. I'd love to hear more about why does a stablecoin, like a Mexican stablecoin, make sense for you? When we analyze it from the lens of on-chain FX, I think that it's self-explanatory. But if you don't have that term, it's hard to understand it if you're not basically doing what you do every day.
Just a month and a half ago, I was as skeptical as you guys to launch a non-USD stablecoin on Capa. But I guess you have to guess and find out if it's going to work or not. I think that having a denomination on chain of a currency instead of having a priced oracle to find if $1 is worth 20 Mexican pesos off chain is just a liability that will bring into the industry at scale. This is an issue that's going to happen 3 to 4 years down the road, when we won't have a way to successfully redeem a 1-1 order book between USD and pesos. Let me explain this a little bit more. Market makers and OTC desk or FX desk all across the world have a daily liquidity cap. On-chain FX lets you understand how much in circulation is actually available in a day. And it sets a realistic expectation of how low and how efficient FX desks can go. LATAM, specifically Mexico, is going to be the first country that's going to reach 0 basis points or 4 basis points, or the overnight rate, which is like the rate that banks lend money to other banks or to other people. It's probably going to be like 4 basis points. So this spread model is just going to be unattractive, because you're basically taking dollars, converting it into Mexican pesos, and just selling it for a demand somewhere else. Now, on-chain FX will probably be the way to duct tape things and create a more efficient order book for payouts, simply because it's self-explanatory that there needs to be an on-chain denomination of capital somewhere. In terms of bonds, accessibility is just important. You can't just limit yourself into investing into bonds from the US. I guess, and I have to be really honest here, nobody that's involved in crypto wants to do a 4% annually. But I guess that there's a solid way to mitigate risk, and then you can buy CETES, which it's also the name of the treasury bonds in Mexico, but you can also get them on chain on Stellar. And it lets consumers have a way to get double-digit yield or an institutional grade return without having to access a proper financial institution, or by finding a way to get outside of the market into their native currency. It's the same thing that happened with stablecoins some time ago. Stablecoins were made for a way that you could exit the market without having to actually exit the on-chain part. Mexicans are going to need their own stable currency to get on-chain, but outside of the market for a while.
Yeah. So it's a matter also of price discovery. Like price discovery on chain will be a lot more efficient than price discovery off chain, because of the amount of liquidity that will migrate on chain. That's part of the point, right?
Yeah, I think that in terms of price discovery, we're basically on a part where we're seeing companies that use dollar-based stablecoins to start and tap into the market. And now they're seeing that the market starts to be saturated because either you're first to market or you have the most innovative yield model to make a rebasing stablecoin on top of it. Now, non-USD stablecoins share similar relations onto how we can adopt a significant part of the chunk or the user base. Meaning that Mexico has a third of the population that the US has. There has to be a third of the total stablecoin holder adoption that's probably going to use Mexican stablecoins to go on bonds. So it gives you an initial perspective of what's going to be the secondary market movers that are going to bring money on chain, and that they're also going to bring emerging market yields on chain. But in terms of price discovery, these companies that started with USD-based stablecoins, they're moving into two angles. Either they're starting to do cross-border payments with their own native stablecoins, or they're just starting to release really meticulous stablecoin projects with a significant sign of where they should head for product market fit. And I think that's something like a company like Etherfuse has been doing quite well. They have a bonded type of stablecoin that lets you earn capital on top of the treasury reserves they have, or they have the fiat-based one that's mostly used for payments and LP movements. And their price discovery right now is the on-chain DEX one, and then we'll start moving more into institutional.
Yeah, I think, Juandi, to your point around reluctance with regards to local stable coins, Ab and I have spoken a little bit about this. I think the narrative that we are reluctant to fall into is like people would rather hold MXNE than USDC. And I'm talking specifically speaking to like retail, right? Because I think like retail needs like I'm going to go to the store and pay with like MXNE, right? And that's just like simply not going to happen. But that is oftentimes like the narrative that gets pushed across the industry. It's like local stablecoins make a lot of sense for on-chain FX. They make a lot of sense for cross-border payments, right? But I think that's one of the things that we often get like really frustrated by, like this narrative of, and as someone who is a sort of, would you rather hold like Mexican pesos or US dollars, right? It's like a very obvious answer there, as an individual. So I think that's always like one of the things we're always like pushing back against this narrative, like everyone's local stable. So I'm like, not really, but big business as well. Yeah.
Dude, Kush, I think that this is a great moment to get this anecdote of you and I going to Meow Wolf in Denver, just coming back from different events, saying, I think that people in the US really do not understand stablecoins the same way as we do. It's really weird because, I mean, it's their currency, but actually they don't need it that much because the dollar works. So what's your take there, Juandi? Because Kush and I have spoken a lot about this, about like how there's this dissonance on how the market is seeing stablecoin and how the rest of the world, like us, that are building products around them, see them. Like, what's the main difference between us and them?
I think the global north still doesn't understand how fast and easy it is to send money from point A to point B. It's interesting that they don't have the same problems we have. I think that in America, the clearinghouse mechanism we're using FedNow, it's still traveling. It's like going back into the Cambrian era, because you have the space system here in Mexico where payments are done almost instant. But about using stablecoins, I think that the most important things, and probably every single stablecoin founder is just going to say it, it's either how fast things can get done in terms of how you understand the processes that you have to get dollars in your day-to-day, and that's for both people and businesses. And then it's how to deviate from the macro conditions that happen in your country. I can put a very brief example. In the DR, we had elections a year ago, and due to the change of electoral process, it's the same party, it's the same president, the peso went from 58 to 63. I basically lost 9% of my money in a year. And it's not like it happened in Mexico also, where the peso was at 15 and 16, and everybody was talking about the super peso, but then it later went back into 2021. Dollars are just a way to find a proper hedge into what happens in the world that you actually live in day to day, but not to what happens at a global scale. People think that the devaluation of the dollar affects us as Latin Americans or us as people inside emerging markets. I think that devaluation just makes it more worthwhile to acquire, simply because it's a universal hedge to what's happening in your day-to-day.
Yep, that's exactly like I think the angle we take on this is people would much rather hedge than use local stable coins, and specifically retail, right? So I think that's just like a thesis that we're going to firmly stand on. But I think it's important, as you say, is we will get to a point where you are going to pay for your little thing at the tiendita with MXNE, right, or some derivative of whatever that Mexican peso looks like, and starting to experiment around on-chain effects and what that looks like today. is, I think, the first step you guys are taking, and excited to see that sort of scale and grow. But I want to like switch it up here a little bit, Juandi, because I am in the presence of some of Latin America's best founders here, right? And one of the things that we often talk about with Ab and with a lot of the work that we do with Elisa, and we've spoken about it too, Juandi, is Latin American founders, by and large, are kind of, it's tricky, right? It's tricky to be a Latin American founder, and then there's a number of different conditions as to like why that's the case, right? I would genuinely consider you specifically to be like a really someone who's found a very clear problem in the market and has built a solution that addresses that problem in the market, right? So walk us through what it's like to be a Latin American founder and what sort of like unique hurdles and challenges and sort of problem sets and also opportunities that you've seen, I think, on the other side of that, building out Capa. And then we're going to shift into like, okay, what sort of wisdom or insights can you share with other sort of emerging founders from the region as well? But let's start off with like kind of your unique insights, kind of starting from the region and scaling up from here.
I think around a couple of months ago in a Mantle event that you were also there, Kush, had a very pinpoint accuracy. We should be less scared of failing. I am the most stubborn person I know. And I guess that I can walk shop into as many capital shops I can get, into as many money as I can get, and then 200 conversations down the road, I'll probably get what I want. But I think that it's a little bit more philosophical than getting what you want. It's about understanding your luck. I guess being Latin American is getting a lottery ticket after lottery ticket after lottery ticket, and it just gives you enough grace to understand what your surface area of what you can do and what you can't do is the way that you have to work as lean as possible and with the tools you have at hand. And as a founder, you find out that you're significantly insignificant. you're basically fighting a sandwich. You're the ham and cheese, and you have to find, and then you have to fight the two parts of the stale bread, which is basically VCs and investors on the top and your customer on the bottom. And trying to portray LATAM to both parts of the sandwich is just hard. There's people that are going to complain about pricing when investors tell you that pricing is not a value proposition. But then there's going to be investors that won't understand how payments and the use of dollars works in the region because they haven't had a one-on-one experience with it. And they just learn across the road about how trendy are these kinds of markets get. But I think that the most important thing is just understanding your luck. I can say that I'm lucky. I think that if you put the time and effort into it, and it sounds super cheesy, any other person can build the next Kappa of the world, or they can build the next band of the world, or they can build the next Licea. It's just a matter of putting just a couple sweat bullets you have in you left. And if you understand your luck, there's as much there's as much or as many lottery tickets as you can wish or that you can win, that'll just let you permeate a little bit more and just core higher.
And what's been your greatest challenge in this Kappa history?
I will be quite honest, it is not raising capital. I have to be completely contrary on this one. Mm-hmm. I've had a pretty solid capital raising experience. I don't know if it's because I can talk a ton and explain the market quite well, or is it because I was just like really, really lucky. I think that the hardest thing to do is putting yourself in the forefront of other products. Stablecoins are a hard market. They're becoming highly competitive. I think that Y Combinator has funded like 20 different orchestrators that head to our Slack or like our Telegram every single day. And differentiation in those products is just how much can I make the end user or the end integrator's life better? And I think that that's what's important right now. I think that there's another angle on the market that it's being underlooked, and it's basically market making. Nobody wants to market make on chain. You have the Kirocks of the world that they just like traditional money desk or they just like traditional order books. But who's doing the on-chain job? And that's a vertical that we saw in Kappa that can give us a differentiation point onto how we can sell our product better and not be part of this dogfight that's happening in the market right now to see who's going to be the single stablecoin orchestrator or the single global payouts provider, because there's a big piece of the pie for everybody. Everybody knows different founders and companies, but not a ton of people know how to do not a lot of people know how to do this kind of like on-chain effects or keeping pegging to like the next currencies that will need bare metal connections and will control the whole stack. I think that just building the whole narrative while surfing the tides is just hard. You have to build your own canoe, and market trends change differently, and you have to change your POV quite often. I'm stubborn when I try to get what I want, but I have to be sometimes not stubborn to understand where the market is moving in the next 3 years. And it's a matter of just iteration, trial and error.
Yeah, it seems like the classical, you need to have strong views loosely held, because, like, I mean, I think that we are discovering the market. We are at the frontier, and I really love the analogy of building a map. When you see a map of the 1500s, it's like, what they were doing. I mean, they were crazy, like putting islands where there are none anything, but it's just a matter of iterating on the cartography to understand the environment, basically.
And we've like discussed with Ab as well. I feel there's so many reasons why anthropologically Latin American founders are not less scared of failing, right? And aren't the people that are going to go like talk to 200 like money market desks and be like, hey, like you should talk to me because people give up after like a couple, right? Or it's like you don't want to be seen as like the outlier that isn't sort of deviating from the group as well. So I think the mindset thing is super important. You mentioned raising capital has not been an issue for you. Let's talk about like what investors you've spoken with, what's their take on the region, right? I mean, you've raised capital for, I think some of the more important investors and allocators in the space. Like, how are you seeing them think about Latin America, and what are the opportunities that they're really excited about? What do they often get wrong as well about the markets? I'd love to hear more about that too.
I don't think that they have a wrong perspective on the market. I just think that it's pretty grassroots based on the material that they have at hand to read on top of and make their own thoughts. Addressing payment systems has always been the hardest thing to explain because how many different pesos do we have? Like 12? we have a ton of pesos and we have a ton of different clearing houses for payments to settle. We've been under different read and write payment systems for as long as digital banking has existed back in Latin America. So explaining to them that the payment system in Brazil is way different to the one we have in Mexico, even in account terminations, is just like a little bit hard for them to grasp on. I think that understanding market dynamics is hard because when they talk about Brazil, we have to understand that Latin Americans don't speak Portuguese, or Brazil doesn't speak Spanish. We fall into this analogy of what market's right and what market's wrong. And it's just hard to set a narrative onto what's the single valid theory that an investor can have about Latin America without needing to prove him wrong on a 30-minute call, because it just stretches the diligence process. I see it as a way where diligence with investors is extended because they're just as curious as how founders are into understanding the region a little bit more, because throughout time, Latin America has just been overlooked. And being overlooked means that you're 10 years late to the market. And the gold rush opportunity for these investors that don't operate or are based out of emerging markets like Mexican funds is that they move fast. Their diligence is faster, their risk appetite is bigger, and they would rather watch you die with a minimum check size than having to fund it into a big company back in the US that has the same stale and linear narrative. But to do that, they just have to be sure that your storytelling is, first of all, fact-checked, and there's a lot of data behind it. And then it's just a way that fits with how they see their POV and payments.
Juandi, thank you for coming, man. I think that you're one of the people in the industry that best understand on-chain effects, maybe in the world, because Latin America is one of the most advanced regions on that specific sub-niche. And you've told me a couple of anecdotes of big companies using Kappa and how crazy they are and how fast they need to move. So congrats on everything that you're building. And the final question that we always ask to everyone that comes to Frontera is, give us a piece of insight, a piece of information that that it's like on your day-to-day, but whenever you explain that to someone in the global north, they get like really surprised.
The revenue pool is going to shrink more than people think when it comes to cross-border payments using stablecoins. The more efficient payments are done, the cheaper they are, means the less revenue there's into the open market. So sometimes I see these wild decks where they say that it's a multi-trillion-dollar industry, and I'm like, for LATAM, it's going to scale to the low billions or to the low tens of billions, because things are just getting slimmer. And when you understand markets that provide a positive dollar rate and a negative dollar rate, it'll give you a perspective of what's worth launching to and what's worth doubling down to, instead of supporting the popular narratives that I've previously explained at the start of the podcast, or the countries that maybe for investors are big enough, but numbers-wise, they are not as efficient for you to build a business. One of the markets I'm most hyped about, it's about Guatemala. They've asked me Guatemala like 20 times, and Kush maybe knows a ton more than me, but No,
it's 20%, 18% of total GDP is derived from remittances, right? And so it's a huge remit, like all of the Northern Central American Triangle is massive.
Yeah, and most importantly, that it's an overlooked market. People see it on the map, and they can just use their thumb, and they just can squash the whole country and say, this is irrelevant. Who cares about Guatemala? But when you go deeper into what the real transactional volume is, I do care too. It's a pretty interesting market. We have gotten a lot of inbound. Like, they open shop in Mexico, then they say, can you handle the R? And then they come like, I don't want to find a Guatemala supplier. Can you do that? And I'm like, not yet, but I need to know how it's going to work. So I'll maybe reach out to you, Kush, later on it. But
we'll cook.
I just think that it's a way that sometimes markets are overlooked, and you shouldn't stick to the soft narrative that we all have, that people think that people from like LATAM don't know how to use a bank account. And I think that's bullshit. We're just using it as a way to send payments faster, instead of using it as a way to really get access to institutional grade returns, or just to hedge from like the real inflation, the real use case, and where most of the volume is. And that's why LATAM moves 8 times more than the global average in stablecoin payments. It's because it's an issue of settlement. It's not an issue of, I really need dollars, because if I don't have dollars, I am like dead in the water.
Yeah. Amazing, man. Where can people find you? Where can people send you a message?
I guess I'm not going to do like a public shout out to my own personal account here. So you can find us on Twitter at Kappa_Fi. And you can always get in touch there, and I'll probably be replying to your tweets or just handling like your whole customer support ticket. Yeah. That's
amazing.
Awesome, Juandi.
Dude, thank you for coming again. You can find Kush at 0xKush. You can find me at AbrahamCR. And remember to read our newsletter. We on Thursday we're gonna publish a deep analysis on on-chain effects. So Juandi, thank you for coming. Kush, thank you for being here again. See you next time. Thank you, guys.
Cool. We ball.